Welcome to episode 48 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, we're following up our look at oil stocks positioned to benefit from AI energy demand in episode 47, with a pair of solar stocks similarly aligned in their quest for shareholder value.
Under the grid's unprecedented demand, there are clean energy stocks turning sunlight into stability.
And who would this be, John?
I've been watching Northland Power Incorporated, NPI on the TSX, market cap of nearly 5 billion Canadian dollars.
You got to give me more, John. What's your story?
Northland checks all the boxes in terms of what's a company's services. You have solar, wind, battery storage, natural gas. It owns and operates across North America, too, Latin America, Europe, and even Asia.
Okay, a global presence, but how has Northland stock performed?
Okay, so let's look back from February 2025. NPI stock, it's risen around 12% in that time, and it's also climbed about 10% since this very year began. 2025 also saw some gains for the stock, and a fairly pretty steady one, but then came a big drop. This was when it reported its Q3 2025 results back in November. Had higher revenue from energy sales, but a bigger net loss. So since then, it has been just under 20 Canadian dollars a share. But it has climbed back up to last year's high of $25 since that big drop had happened.
The big question then becomes, John, could this net loss signify a buying opportunity, perhaps?
Here are some reasons to be bearish. Northland pays a quarterly dividend, and roughly 95% of its revenue is backed by long-term contracts. The company's made some ambitions public to expand to 7 gigawatts of capacity by 2030, aiming for 10% shareholder returns as well. So we'll have an even clearer picture of this performance around next week when Northland Power releases its Q4 2025 financial results.
One more for you, John. Could you explain Northland's power generation capabilities?
Yeah, look at it this way. Assets that are owned by Northland Power are capable of generating 3 gigawatts of energy, which can power roughly 2 to 3 million homes, or 3 nuclear reactor units, or 6 big natural gas power plants, an entire metropolitan city at peak consumption, or 30,000 electric vehicles at once. So that's the big grid picture. Now let's zoom in. If Northland represents the utility side of renewables, Trevor is going to tell you about what's happening on the front lines of residential solar.
That's right, John. Today I'll be delving into Enphase Energy, ticker ENPH on the NASDAQ, a profitable mid-cap renewable energy company that ranks as the world's largest provider of microinverter-based solar and battery systems, with more than 90 million devices installed across more than 160 countries to date.
So where's the value in solar nowadays, broadly speaking terms?
Let me lay it out for you, John. As the global electrical grid deals with increasing strain because of electric vehicles, data centers, and AI technology, with the International Energy Agency expecting demand to grow by 75% by 2050, renewables are stepping up to the plate, putting solar energy on pace to represent a whopping 80% of growth in the sector through 2030.
Interesting. So then why does Enphase deserve this conviction when it comes to capitalizing on this demand?
In my opinion, the company checks all the boxes for consumers as well as investors, combining electrical current conversion technology more efficient than legacy options, and a convenient app that acts as a one-stop shop to use, save, or sell solar energy, with a strong financial track record as well, including significant revenue and net income growth over the past 6 years, and more than $1.5 billion US in liquidity to self-fund growth initiatives at a time when falling technology margins, thanks to solar power's proliferation, is more likely than ever to make smaller players prime M&A candidates.
More boxes checked, except one. How has Enphase's stock reflected its global presence and sound fundamentals?
Very poorly, actually, to the point of irrationality, I would say, with shares losing more than 75% since 2021, creating the kind of price-value dislocation value investors daydream about as they comb through the 52-week lows.
Enphase leadership is forecasting for a slight margin erosion in Q1 2026, reflecting reciprocal tariffs. How should investors digest this information?
It really all comes down to your capacity for contrarianism. let's put it that way, which we can define as deriving conviction from data regardless of the broader market sentiment. Given Enphase's established profitability and solar's long-term tailwind, a lower share price would represent a bigger discount, at least to my eyes. Listeners should, of course, run the company through their own due diligence processes to come to their own decisions.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Northland Power and Enphase Energy and is intended for informational purposes only. For full disclaimer information, visit themarketonline.ca/disclaimer.